Hey guys, what's going on? Welcome to the video. So it's been a very slow few weeks in the stock market at the index level, though there may be a big move on the way soon. In this video, I'm going over what to expect next and watch for in the week ahead for that possible trigger point for upside or downside on the S&P 500, and also going over the top 3 trade ideas that I'm watching in the week ahead, with all of those having potential for a very large and strong move soon. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart, it has been a very slow few weeks since it broke out above the 590 to 592.6 key zone and successfully backtested it as new support. From there, it grinded up before finding a swing high at 605, and then last week it had a slow grind lower and is now nearing a backtest of that 590 to 592.6 zone once again. So into next week, it'll be all about the 590 to 592.6 zone. If it's able to hold above as support, buyers continue to be in full control of the trend, and it can work back up the levels above, which are at 594.5, 597.5 to 597.95, 600 to 601, 603, and then 605 to 606, and then a new swing high above there. If it was to break back below 590 to 592.6 though, that would act as a downside and pullback trigger, which would then open downside back towards the levels below at 585.3, 580 to 582, which will also align with the 200-day moving average, and then 576.2. Due to how slow the price action has been over the past few weeks, there's likely a strong and more directional move coming soon, and it will likely all depend on whether 590 to 592.6 hold for upside or breaks for downside, and that can shift the short-term trend to either staying bullish or switching to bearish. Alright, so now getting into the top trade ideas that I'm watching in the week ahead, starting out with Coherent, ticker symbol COHR. So this stock has been building out a well-defined consolidation range for about a month and a half and is likely on the verge of a break very soon. So the range that it is built out is between 73.9 to 75.1 as support in the bottom of the range and 83.45 to 84 as key resistance in the top of the range. Also, the 200-day moving average is slightly above there, currently at 84.65, which could make that potential upside break even stronger if it was to break above the top of the range and the 200-day moving average simultaneously. And due to how long and well-defined this consolidation has built out, there's potential for a very large move once it breaks, and breaking above that zone opens upside to the targets above at 87, 90.2 to 90.6, and then 95.3 to 96.2 as those initial target levels above. It could also see a strong downside move if it breaks to the downside of the range, but I would only focus on it being an upside play as of now due to this consolidation being a bull flag, due to rising into it first, and it's tightening on the right side of the range now, which often does indicate a break to the upside soon. But this could be viable on a break and hold above either 84 or the 200-day moving average, depending on how much confirmation you want to look for, and it can be playable with a tight stop loss back below at 83.45 or slightly below there. And another very similar setup to that is with Astera Labs, ticker symbol ALAB. This has also been building out a well-defined consolidation range for about a month and a half, and the range has built out between 87.1 support and 95.25 to 100 resistance. It attempted the range breakout on Friday with a gap up in the morning above 100, though it failed to hold and quickly got sold back into the range. I would still consider this consolidation range clean and valid, to where a break and hold above 100 can trigger that breakout move. For the bull case, this can be looked at as a cup and handle pattern, with the current consolidation range building out the handle, and can be very explosive if and when it breaks. The target levels above on a clean break would be at the 113.28 gap fill, and then 120 and 127.4 next above there. And similar to the previous setup that we went over, breaking to the downside of the range can produce a downside move, though I would not be interested in shorting the breakdown, and this is due to both major moving averages being below it, so it would be high odds to see something like this where it breaks down, finds support off one of the major moving averages, and then reclaims the bottom of the range, which if so, it could be a long entry to enter on the reclaim of the bottom of the range, for a little false breakdown setup, which will often trigger clean upside moves in result. And one more very well-defined consolidation setup is with Tesla stock, ticker symbol TSLA. So after its large sell and then relief bounce, it has been building out this consolidation for about 2 weeks between 314.15 as support and 331.5 to 335 as resistance and the top of the range. That 331.5 to 335 zone was also key support and bottom of the range for the previous consolidation, which as we can see, 7 different days of tests and holds as support, and that also acted as the breakdown trigger once it broke, leading into that large sell. So because that zone has been such a key pivot, it can act as a strong upside trigger above, which would open upside back into the previous range and target the levels above at 347 to 350, then 358.35 to 361.5, and 367 above there. On the downside, breaking below 314.15 would be the downside trigger, though it's important to note once again that both major moving averages are below this at 309.93 and 303.65. So for a true breakdown and large sell, it would need below those major moving averages as well. And if not, a playable long setup could also be something like this, where it breaks down, holds one of the major moving averages, and then reclaims back above 314.15, which can act as that failed breakdown trigger, which setups like that will often trigger violent moves back to the upside and ultimately target the top of the range, be that 331.5 to 335 zone, with potential for a break higher above there as well. So that is what I'm watching for in the week ahead. It's likely that we get a directional move on the indexes very soon, and with those well-defined consolidation setups, they make for great trade ideas as you can enter above the range with a tight stop loss back below it to keep risk low and potential for large and violent moves on those breaks. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. I will catch you all next time. Good luck trading the week ahead, and peace out.